Okay, so very good afternoon to all of you, and wish you all a very happy and a prosperous Sinhala and Tamil New Year. So, today we are going to complete this topic, Introduction to Macroeconomics. So, until now, we have discussed about almost all the topics related to business economics. So we have discussed about the introduction to economics. We have discussed about what do you mean the demand and supply, and there you learned about the law of demand, the law of supply, the determinants of demand, the determinants of supply, and then we discussed about the equilibrium, and then we equilibrium in a market, and then we learned about the government interference. Then we discussed about the elasticity of demand and supply, and we did certain calculations. Then again we learned about the theory of production and cost. Then we learned about the market structures, and now like after completing all those, we have completed the microeconomic aspects of economics, topics related to microeconomics. So now last week I started off with the introduction to macroeconomics. There you are learning the macroeconomic perspectives, right? So we have started this topic week before last week. So there you learned about the difference between the micro and macroeconomics, and we learned how to define the microeconomics and macroeconomics. Then we discussed about several examples, how to categorize whether it is a microeconomics or a macroeconomics example. And then we learned what are the characteristics of this micro and macroeconomics. I mean, what are the things that we are going to learn under macroeconomics, and what are the key measurements. We discuss all of these. The gross domestic products, how are we going to measure this gross domestic product, and what do you mean by the gross national product, and what is the relationship between the gross national product and the gross domestic product. And then we learnt about the real GDP and the nominal GDP, and then we discussed about the GDP deflator, how to calculate the GDP deflator. Then we did this example, and then we discussed about the major macroeconomic issues. There we discussed about the inflation, the definition of inflation, what do you mean by inflation in general terms, and then what are the categories of inflation. Then again, what is the rate of inflation and how to measure the inflation. Then measuring the inflation by using the consumer price index, the wholesale price index, and the GDP deflator. Right, so these are the most common ways that our country is using to measure the inflation. So you know that in Sri Lanka we are having the consumer price index, right? So that consumer price index is consist of certain goods and services that are consumed by end customers, end users la consume karana end goods and services we have. And they are like those include please give me 1 second. So they have a market basket, so they have prepared a certain goods and services, including the goods that we are purchasing in our day-to-day life, like rice, dal, and soap and shampoo, and all the clothing, few clothing items, the slippers, and all the goods related to that. And what do you think? Do we have is alcohol included in this consumer price index? What do you think? What do you think? Are those included? I mean, the alcoholic beverages included in this? Yes, yes. No, no. Yeah, we in like the consumer price index. So, this is the consumer price index. So that is the normal goods that are consumed by the general public, by a general person, right? So it includes the goods and services prices, the educational related prices, the restaurants and hotel prices, and then clothing and footwear prices, the healthcare services, or the price that we are normally spending for healthcare, and housing, water, electricity, gas, and other fuels, and furnishing items, household equipments, routine households and maintenance, and communication related or telecommunication related expenses, transport related expenses, and the expenses that we spend for the culture and the recreation. And we have the food and non-alcoholic beverages, and we also have the alcoholic beverages and tobacco. So all these things, so when I'm reading this list, so you might think that all the goods and services consumed by each and every person is included here, right? So that is why it is identified as a consumer price index. So by calculating all these prices or all these values, we are calculating the consumer price index. So by preparing the consumer price index and then by comparing that with the previous year, we can identify whether there's an inflation or not. So that is one of the ways that the Sri Lankan government or the Central Bank of Sri Lanka is preparing this inflation. And apart from that, they have the wholesale price index as well. So that doesn't include the final goods and services. So that includes the wholesale prices. So not the final good prices that the consumers pay. That is a wholesale price. Wholesalers la purchase කරන ඒගොල්ලොන්ගේ අදාළ agricultural produce වලට එහෙම නැත්නම් manufacturing වලට produce කරන වට spend කරන amount එක තමයි මෙතන wholesale price index එකේ include වෙලා තියෙන්නේ. Right, and then by taking those also, so there are certain examples. The key industrial and agricultural products such as steel, sugar, etc. Because the wholesale price index in raw unfinished products, the wholesale price index intend to measure the price level changes before the CPI does. Right, so they are including those wholesale prices, and they are calculating the price fluctuations related to the wholesale prices. And then the calculation of the GDP deflator that you already know. So the GDP deflator is already calculated by taking the GDP nominal real GDP එක අරගෙන එක calculate කරනවා. to calculate the inflation. Right, so you know how to calculate the GDP deflator, that is by dividing the nominal GDP by the real GDP and multiplying by 100. Right. So those are the three ways to measure the inflation. And apart from that, we are after that we are moving on to another macroeconomic indicator, that is unemployment. What do you mean by unemployment in your understanding or in your knowledge? What do you mean by unemployment? How does a person becomes unemployed? Tell me, how can a person become unemployed? Tell me. කොහොමද කෙනෙක් unemployed වෙන්නේ? Tell me, how can a person become unemployed? So we say that person is unemployed. So how can we say that that particular person is unemployed? Tell me. So basically, unemployed, that is the opposite of employment, right? So if a person doesn't have a job, we call that person as an unemployed person, right? මුලින්ම ඒ කෙනාට ජොබ් එකක් නැති වෙන්න ඕනේ. So then that particular person is identified as unemployed. But apart from that, like, he should obviously be unemployed. That means he shouldn't have a job. But there are other few criteria that particular person should fulfill, right? So they should seek for work, right? So they should be looking to get a job, right? So they need to apply for jobs, they need to put CVs or send CVs, go for interviews. Likewise, they should be able to actively seek for jobs, and those people should be available for work but have not employed during the reference period. So normally the reference period is 4 weeks, right? So at that particular time, at the time when the government is doing this particular survey, that particular person should not have a job, and that particular person should be actively seeking to work, seeking for a job in that particular reference period. So then we calculate and we identify that person is an unemployed person, right? So the unemployment rate is the rate that we are using in our calculations or in our reports. So that is the number of unemployed persons as a percentage of the labor force. The unemployment rate equals the number of unemployment divided by the labor force multiplied by 100, right? So we'll look what is the labor force in the future slides, right? So please read this. Please take 1 minute and try to like grab the things in this particular definition. So what are the key points under this? It says the term unemployment can be defined as people who are not employed. So unemployed in the sense the people who are not employed but are actively looking for work and waiting to return to work, right? So sometimes, so I think you can remember in your field also, in the hotel industry also, so there were many people who were temporarily laid off, right? So who lost their jobs and so the organizations or the hotels inform those employees that we are like resigning you, and you need to resign from the job for this particular time period, but we will call you back, right? So then those people will also be considered as unemployed for that specific time period. Or else there can be some people who have resigned from the previous job, and they are waiting to be called for the new job after 2 or 3 months. So those people will also be considered as unemployed, right? So the unemployment is the gap between the potential full employment and the number of employed people. So these are the characteristics that you need to fulfill when we categorize a particular person as an unemployed person. A person is unemployed if he or she is not working and has made efforts to find a job. That means they have sent the CVs, they have gone for interviews, they have informed their friends and family to inform if there's a suitable vacancy, and a laid off from a job and waiting to be recalled. That is what I told you previously, right? And is waiting to report to a job in the near future, right? So that person has resigned from the current employment and is waiting to be recalled in the near future. So those people are categorized as unemployed. And these are the basic concepts that you need to understand, right? So please read those. So what are the how can we classify a person as employed? So that means that person is having a job. So if you don't have a job and if you are available for work and looking for work, you are unemployed. So in your examination, if that is why I'm asking you to read and I'm asking you to repeat it again and again, because if in the examination, if you are asked to write the definition for unemployment, you need to highlight all the points that I mentioned previously. Otherwise you won't get full marks, right? And if you are neither employed or no available for work and looking for a job, you are not in the labor force, right? So some people are there, they are not looking for work, they are not employed or they are not looking for work, and they are not interested to work. So then those people are classified as not in the labor force, right? So either if you are under these each of either of these points, you will be considered as employed. So read and see what are those. So what is the first one? So full-time, part-time and temporary work. So either you're working as in a full-time job, or either you're working as a part-timer or a temporary work, or for a contract period, or for like you're going into internships or a training period. So you will be considered as employed. And then worked at least 1 hour or more for pay or profits during the survey week. So you work for 1 hour or more for pay or profits. And then worked 15 hours or more without a pay in a family business. Right, family business එක ඔයාලට pay එකක් හම්බුනේ නැතුව වැඩ කරත්, so you will be considered as an employed person. And temporary absent from work, so that means you're in this New Year week you're taking leave, right? So then you won't be even though that analysis or the unemployment survey is conducted in this New Year week. It's like taking this New Year week into consideration, you won't be considered as unemployed and you will be considered as employed. And illness, vacation, labor disputes, right? So sometimes people might take sick leaves for at least 2 to 3 weeks, right? Or 1 year sometimes. And then people might take their vacation leave and go abroad, right? And sometimes due to labor disputes or due to some court issues, people might like be suspended from working, right? So due to those labor disputes, so then also you will be considered as employed. And then unemployed, so you don't have a job, you are available for work, you have made specific efforts to find a job during the previous 4 weeks, and you are not working, waiting to be recalled back to a job from there they were which you were temporarily laid off. So you need to identify what are those. And then not in the labor force is these categories of people are not in the labor force, so we categorize them as not in the labor force. So just see who are they. So the first one is those who have no job and are not looking for work, right? So there can be some people, so those people are not working and they are also not looking for work, right? So people after getting retired, so they won't be looking for work. and they will just stay with their pension and all, so they won't look for work, look for new jobs. So then those people are retired people and they are considered as not in the labor force. And full-time students or students or the schooling students are not considered as labor force, are not in the labor force. And homemakers, that means the housewives, right? So they are not working, and even though they are qualified, they are not looking for jobs. So then those are identified as not in the labor force. And those are the individuals who are not in the labor force. The below are the institutional population that are not in the labor force. The first one is the mental institutions. That means the people who are in mental institutions or mental hospitals, right? So those people are also considered as not in the labor force. And people in prison or the prisoners are considered as not in the labor force. And the military is also considered as not in the labor force. So if you have a particular person in an army, right, that person is not considered as not in the labor force. And see how this flows in the labor market differs. Try to understand, look at these flows and try to understand. So how does this labor market flows go? So you can see, you can start either way, right? So I will start from employed labor force, right? So a person is retiring, and then if that person is retired, then he is out of the labor force, right? And after retiring and after like being in out of the labor force for some times, and that particular person might think that he can work again, then he will be looking for jobs, and then he will be applying for new jobs. So then he will be a re-entrant to the unemployment category. Or else if he straight away find a new job, so that he's taking a job, then he'll again be employed, right? And then sometimes employed labor force will be new will be there, will work there, and then they will have some job losses and layoffs and quits. Then that particular person will come to the unemployed category. And then if that particular person is unemployed for a certain time period, and he becomes discouraged to work, then he'll also go out of the labor force. And then if a person who was in the unemployed category get a new job or get a new recall, so then that person will again go to the employed category. So that is how these labor market flows are going on. And this is the labor force. So the labor force consists of both the employed and unemployed category. And this is the active labor force, active population. So active population includes the labor force. That means the employed people and unemployed people plus the not in the labor force people, right? So however, when you're calculating the rate of unemployment, you need to calculate the number of unemployed people divided by the labor force. So what are the two categories that we can identify under labor force? Employed and unemployed. Right, the unemployed rate measures the percentage of unemployed people in the labor force. And then these are several sources of unemployment. So we can identify the reasons for unemployment. The first one is the fictional unemployment. The second one is the structural. The third one is the seasonal, and the fourth one is the cyclical unemployment. Right? The first one is a frictional unemployment. So what do you mean by a frictional unemployment? Right, so you can read this. I will give you 1 minute. So these are very important. You can read and then I will explain. Okay, so what do you mean by frictional unemployment? That means the time required to bring together labor suppliers and labor demanders results in a frictional unemployment. The employers need time to find out the talents available. Job seekers need time to find out about the job vacancies. So this is considered as a voluntary and does not last long time. Imperfect information about available job opportunities can lengthen the period of someone's job search. That means, so this happens because of a technological and a geographical boundary, right? So due to certain imperfect information about certain job opportunities, there will be some time to find out the jobs that are available, right? So in previous days, right? So in previous days, people like for an example, people who lived in Gaul couldn't find jobs at Jaffna, right? So jobs that are available in Jaffna, right? So then they had to search more, and the like people who worked, the employers who seek employees in a particular sector couldn't find the suitable employees because those employees didn't get the job vacancy information quickly, right? So nowadays, due to the technological advancements, so those are not there, right? So we nowadays have the employment databases, so we have certain platforms to apply for certain jobs, right? So we have platforms like Glassdoor, Top Jobs and all. So we get to know the job vacancies that are available on time, right? So if those information are not available, so there will be certain time period to like find out the suitable jobs that are available. So then that is identified as a frictional unemployment. That frictional unemployment is not that much what do you mean it's not that much hard, right, to fulfill or to like mitigate, because due to the technological advancements that is easily be mitigated. And the next one is a structural unemployment. In the structural unemployment, this arises from the mismatch of skills and opportunities as the pattern of the labor demanded in the economic changes, right? So this occurs because of change in demand, and change in technology reduces the demand for certain skills and increase the demand for other skills. Structural unemployment is usually voluntary and can last long time. So what do you mean by that? So previously in the frictional unemployment, the information was not there. Now there's a mismatch of the skills that are available. Skills වල mismatch එකක් තියෙනවා. Right, so at the time of introducing the computers, right, so there was a structural unemployment to find out employees who have a computer literacy, right? Because many people were trained to work with typewriters, right? So they were not trained to work with the computers, right? So then there was a mismatch of skills. So because of the mismatch of skills, the structural unemployment occurs. There's no other way to reduce this structural unemployment. The employees need to expand their skills and enhance their skills according to the labor requirement or the industry requirements, right? So that is the only way to mitigate this particular unemployment. Yeah, and the next one is a seasonal unemployment. What do you mean by the seasonal unemployment? So some like for people who work in seasonal related jobs, or people who work in particular industries that has seasonal shifts, will have a definite unemployed period for the due to the seasonal changes, right? So this mainly happens because of the agricultural, tourism and fishery industries, right? So you know that in your industry also, in the tourism industry also, we have a peak season and an off season, right? For the season, so you might hire temporary workers also. So in the off season you won't hire workers, and sometimes the people will lose their jobs also, right? So your salaries will sometimes be reduced based on the service charge and all, right? So these people who are working in these particular industries know that their jobs are having a seasonal unemployment, but that is not like definite one that will last for a longer time period. That will also again shift based on the seasonal changes. Those employed in seasonal occupations know that they will probably be unemployed during the particular months. Okay, so that is the seasonal unemployment, and so there's nothing to do for this type of an unemployment as remedies. And then we do have the cyclical unemployment also. Right, so read and see what do you mean by the cyclical unemployment. So what do you mean by the cyclical unemployment? There's a cyclical relationship between the demand and between the demand output employment and the unemployment, right? So the cyclical unemployment occurs because of the general decline in the output during a recession, right? So the most firms reduce their demand for inputs including labor. A slowdown can lead to businesses laying off workers because they lack confidence that demand will recover, right? So based on the economic downturn, so there will be some kind of an unemployment, right? So that is based on the economic output and the economic recessions and all, right? So in order to eliminate these kind of cyclical unemployment, we need to manage the fiscal and the monetary policy properly. Otherwise there's no any way to mitigate this cyclical unemployment. So this other than the cyclical unemployment, all the other three unemployments are manageable, and those are not that much hard or that much serious. But if you identify that a particular economy is facing a cyclical unemployment, so that is a serious situation. So the that means the authorities have not managed their outputs properly and the economy properly. So they need to do certain actions or take certain measurements to mitigate this kind of a cyclical unemployment. So are you all clear with the four types of unemployment scenarios? Are you all clear with that? Okay, good. So then we are going to move on to the full employment. Right, so what do you mean by full employment? So normally when you heard the term full employment, you might think that it is zero unemployment, right? පූර්ණ සේවා නියුක්තිය කියන්නේ සේවා වියුක්තිය බිඳුව වෙන එක කියලා හිතන්න පුළුවන්. But that is not the case, right? So we don't mean that we can make the full unemployment by making the unemployment zero, right? So when we are saying that we have achieved, or the economy has achieved the full employment, that means that the cyclical unemployment is zero. So I hope you can remember that I told you the cyclical unemployment is the hardest or the most serious part from the other unemployment categories. So we need to manage that. So other frictional, structural or seasonal unemployments are temporary, and those can be managed, and those are not that much serious also. But if you think about the cyclical unemployment, that is another scenario that has to be treated very carefully, right? So when we say that the economy's target or the objective is to make the full employment, that means they are trying to make the cyclical unemployment zero. So when the employment is at full employment, there will be some frictional, structural and seasonal unemployment as the natural rate. So you know that, right? So for the seasonal changes, so there will be some unemployment. For the information mismatches, there will be some frictional unemployment. And for the skill mismatches, there will be some structural unemployment. So, but those are temporary. We can address those. But when we consider that we are having a full employment, we say that the cyclical unemployment should be zero at that particular stage. Right, so these are the economic and social cost of unemployment. So, please read this, take 1 minute and see whether these are actual social and economic cost of unemployment. This is the private cost of unemployment. So that means this cost affects to individuals. That means individually for the person who is unemployed. Okay, the first, I hope you have read this. The first one is the private cost for unemployment. That means the individual cost for a person for unemployment. That means the loss of income. So that is the a main thing that happens, right? So when a person doesn't have a job, so they are losing their income. And then fall in real living standards. That means if that particular person had a very high standard of living previously when he was doing the job, then after losing the job, that person can't maintain that particular standard of living, right? In the recent past, there were a very large amount of layoffs from the IT sector due to this AI integration and all. So those people have earned a large amount of salaries previously, but after laying off, so they uh, can't maintain those salaries and all, the standard of living, because they don't currently have that particular salary. And then increased health risk, right? So if you currently lose your job and due to that particular issue, you will have stress. You will The person that has lost their job will get stressed, and the reduction of the quality diet, because people won't eat healthy or eat nutritional foods, food with a high amount of nutrition, because they can't afford that. So there will be a reduction in the quality of diet and the social exclusion because of the loss of income and work, right? So they can't go to the previous social gatherings they went before, so they will be socially exclusive. And loss of marketable skills and motivation. So if a particular person is unemployed for a longer time period, so that particular person is having a lower chance of finding a good job with the same skill, because now all the industries are searching for fresh employment after passing out from the universities and from the colleges. So they are searching for fresh employment. So if you are unemployed for a longer time period, so then your skills will be outdated, then you will lose the marketable skills also. And these are the economic consequences for the businesses. So see, what are the economic consequences? Okay. So, what are the negative consequences for the business? Fall in demand for the goods and services. So, why there's a fall in the demand for goods and services? So, even though the supply is there, even though the people will have a even though the companies will provide the same supply, people won't be able to buy all those goods and services that they bought previously, right? So then there will be a fall in the demand for the goods and services, and the fall in demand for the businesses further down the supply chain, that will have a reduction to the supply chain, because even though the supply was there, like previous case, the demand was reduced, and then there will be an effect to the supply chain as well. And consider the negative multiplier effect from the closure of the major town, employee in the major town or a city, right? So there will be a multiplier effect. So what do you mean by a multiplier effect? So think about closing the main employer in your town, or in your village, or in your city. So then there are a lot of people who did jobs at that particular places will lose their jobs, and those people will become unemployed, right? And those people won't make demand for the goods and services. And if the demand for the goods and services are reduced, so then that will have an impact to the other businesses as well, right? So those things will be there as negative consequences. However, there can be some positive consequences as well. So bigger pool of surplus labor is available. So if many people are unemployed, so you can have a large pool of unemployed people. So then you can like purchase the labor at a very low cost, and less pressure to pay high wages, because since many people are unemployed, they will somehow try to get a job without demanding higher salaries. So that is an advantage for the employees perspective. And less risk of industry strikes. So if you if many people are unemployed, and if few are employed, so then that particular employed people will also have a pressure on their job. So they will try to somehow manage it without losing the job. So then there won't be any in the strikes, or like labor actions. And then these are the consequences for the government or the fiscal policy. Read those and try to understand before I explain. Okay, so the consequences for the government policy or the fiscal policy, right? So, loss of tax revenue. So, when people are losing their jobs, what is happening? So, people are not earning, and people are not earning, so then they won't be able to pay taxes. So, they won't pay taxes. So, then the tax income of the government will reduce. However, the government has to increase their expenditure. That means, that for the lower income people, so for the people who doesn't have jobs, so they have some certain, the government is paying certain compensation. So, like in Sri Lanka, we have Asvasuma and all. So, those are for the lower income people, right? So, those things should be done, or those things should be done by the government. That means the government expenditure will increase while their earnings will decrease. And loss of profits. With higher employment, firms are likely to sell more and make higher profits. If they make less profits because of the unemployment, they might have less funds to reinvest, right? So if you are not earning at a sufficient rate, so then you won't have funds to reinvest. So then if those companies are not having funds to reinvest, so they won't be able to expand their businesses. So then that will ultimately impact to the what do you mean to the government's income, right? So those are the consequences for the fiscal policy, and these are the consequences for the economy as a whole, right? So loss of output of the economy, so the economic output will be reduced because like when the unemployment is there, people won't produce more goods and services because of the demand is lower, and then the GDP will become lower, and that is also a consequence. And then unemployment seen as an inefficient way of allocating resources. Labor market failures will also be there. And then some of the long-term unemployed may leave labor force permanently. Fall of potential GDP, right? So if a particular person is unemployed for a long time period, then that person will reduce their like potential to work in the future. So the people who are unemployed for a long time will be discouraged to work again in the labor force. So then they will go away from the labor force. So that will also be there in the economy, and some of the long-term employed will may leave the labor force permanently, fall of potential GDP, right? So that will also happen, and then the increase in inequality, rise in the relative poverty. So if many people are unemployed, then they will have a reduction in the GDP, and they will not have enough income to spend. Then overall the poverty will increase. That is all about the unemployment. So then we are moving on to the economic growth. So what do you mean by economic growth? The economic growth is a sustained increase in the real GNP, or the sustained increase in per capita real GNP. An economy can grow over time as a result of the change in available amount of resources in the economy and changes in the efficiency of factors of production. Right? So in Sinhala we call this as the Arthika Vardhanaya. Right? So that is the where we understand that if a particular economy is real GNP, or the per capita real GNP is increasing continuously due to the change in the available resources in the economy and the efficiency of production, so then that will have an economic growth, right? And then we are moving on to the business cycle, right? So what do you mean by a business cycle? So that is one of the main things that you need to learn when you are learning about the macroeconomics, either the term business cycle or the economic cycle. So we use both terms simultaneously. Refers to the economy-wide fluctuations in production or economic activity over several months or years. These fluctuations can be either expansions or contractions. Right, so this is one of the most important terms. So economy, like the economic production, එකක් හරි economic activity එකක් හරි මොනා හරි fluctuations වෙන්න, there will be some kind of phases and some kind of like reasons and some kind of stages, right? So we through this business cycle understand what kind of phases are there, what types of stages are there in the economic cycle, and what kind of economic like activities that we can identify in these economic or business cycles, right? So we have expansion stage, the recovery stage, expansion stage, and the from the expansion and the recovery, we can identify that the economy is upgrading, or economy is like expanding. And then we have the contraction stage, that is based on the recessions that we have in the economy, and there will be an economic downturn in that particular scenario. So these, as I told you, there are expansions, contractions in the recovery stage and the recession, and there are certain different impacts due to the different areas. So you can see that the highest point is known as the peak, and then there's a downward slope that is called as the recession, and the lowest point is known as the trough. And then from the trough, when you're going upward, or when you're in the recovery stage, or when you're expanding the economy again, that is known as the recovery stage. And then from the recovery stage, you're going to the peak, and then again there will be a recession, trough, and a recovery to the peak. Right, so the straight line that is mentioned here in the blue color, that is the optimum line or the real GDP. So that is the optimum line that we are going to expect, but the actual scenario will vary. So that is shown by this peak, recession, trough, and the recovery. Right, and these curves, as I told you previously, this curve shows how the economy can fluctuate, and why these fluctuations are happening, and if there's a difference between the expected outcome and the actual outcome, there's a fluctuation, right? So from these fluctuations you can see the difference between the actual and the optimum output. And then there are certain implications in each of these phases. So we'll see what are those implications in each of these phases. So you need to understand what kind of scenarios will be there, will be presented in each of these phases. Right, so firstly we'll talk about the recession phase. So when there's a recession, the economy is going to slow down, right? Economy is slowing down. Economic පල්ලෙහාට එනවා economy recession එකේදී. And then the level of sales and the production orders will also decrease. And then the production facilities become underutilized because the economy is slowing down and the level of production and the sales are going down. So then the production facilities are becoming underutilized, and then the companies will lay off their workers, and when the employees are losing their jobs, they will have a very low amount of a disposable income of the individuals, and then again the banks will increase the interest rates of the default loans, increase the rates of the loans that they have already given, and the production facilities will have idle capacity because the output is lower, and the companies are forced to reduce the prices to increase the demand, right? So what kind of examples that you can see in the if I like when I'm explaining this, what kind of examples that comes into your mind? Do we have this kind of an experience previously? Can you remember the economic downturn period and the COVID-19 period? So all these situations were there in those two periods. And then the next scenario is the trough period. That is the lowest level in the economy, right? So that there, the economy, we say the economy is distressed in this particular scenario, right? So that is the worst case of the recession, we can say, right? And the demand for the products and services is continuously decreasing. There's a slowdown in the production facility, and the layoff is continuously happening. The unemployment rate is continuously increasing. The income is decreased. The GDP is decreased, and the demand for, now the people are not demanding for loans because people, there are a high number of unemployed people, and they can't pay off the loans if they take loans. So then the demand for loans will be lower. And then those type of situations can be identified in the drop situation. And then we have the recovery stage. So now like after the drop situation, the economy is slowly recovering to the initial stage. So then the lending rates are again decreasing. So the central bank is decreasing the lending rates, and the companies can afford to take loans, and the companies are taking loans, and there will be a higher demand for the goods and services. The production is increasing, the employment is increasing, the consumer's income is increasing, the profit margins and the GDP, all those things are increasing continuously. And then we have the peak situation. There's an increase in the demand. When the peak situation is there, there's an increase in the demand for both the capital and the consumer goods. The companies invest more on the production facilities, and the inventories the number of inventories are increasing to produce more goods and services to increase the sales. And bank loans, people are taking bank loans, and there's a lesser number of defaults when the people are taking bank loans. And almost all the people in the labor force is having jobs. That means the unemployment rate is very low. Most people are employed. So the inputs are becoming expensive, right? So the industry materials are somewhat becoming expensive, and people are like producing at their maximum scale. So those are the consequences that we can see, or the implications that we can see from each and every stage of the business cycle. And with that, we can move on to the exchange rate, right? So what do you mean by an exchange rate? So that is the rate at which a currency is going to be exchanged to another currency, right? The price of the currency is simply the exchange rate, right? අපේ රටේ currency එකකුයි වෙන රටක currency එකකුයි හුවමාරු වන මුදල තමයි අපි exchange rate එකක් කියලා කියන්නේ, right? So that is determined by the demand and the supply of the currency, and the other market conditions that they are having. So there are two types of exchange rates. If the government is controlling the price of the exchange rate, so that is known as a fixed rate. And if the price of the currency is determined by the demand and supply, that is known as the floating exchange rate, right? The exchange rate is the rate at which one currency will be exchanged for another. It is also regarded as the value of one country's currency in reaction to another currency. Exchange rate can be floating or fixed, so that is what I mentioned you previously. A floating exchange rate is where a currency rate is determined by the market forces. This is the norm for most major nations. However, some nations prefer to fix or pledge their domestic currencies to a widely accepted currency like the US dollar. Reasons for fixing the exchange rate can be due to reduce volatility or better manage the trade relations. Right, so that is all about the exchange rate. The circular flow income of several types. So we are going to learn about the circular flow of income on a two-sector economy, three-sector economy, and a four-sector economy. Right, so the circular flow of income in a two-sector economy, that is the simplest model that we can see. So we have two individual units, the households and the business firms. And this circular flow of income in two-sector economy shows how the resources move from one unit to another and how the payments are made from one unit to another. Right, so you can see by looking at this, you can see from the households to firms there will be factors of production, transfer of factors of production, and in return the households are getting factor payments. So then the business firms you are using these factors of production to produce goods and services, and the households are buying these goods and services from the business firms, right, by paying money. That is the consumption expenditure. Right, so that is about the two-sector economy. And in the three-sector economy, another party comes into picture, that is the government. Right, so you can see the activities of the households and the firms happened as it is, as I explained you previously. However, the household's income is earned for providing factors of production. So you know what are the factors of production and all. And out of the income that they generate from selling the factors of production, the households will pay taxes to the government. Right, so the government will also pay transfers as well as certain things to the households, and the business firms are also paying taxes to the government, and the tax is considered as income of the government. From that income, the government will do some purchases from the businesses, so that can also be identified here. And this is the real picture of the economy. Economic හරි picture එක තමයි මෙතනදී බලා ගන්න පුළුවන් වෙන්නේ. Circular flow of income in a four-sector economy. Right, so there you can see four parties. Apart from the households, the business firms and the government, you can see the foreign party as well. right? So here you can also see the dotted lines and the normal lines. So in the dotted lines you can see the factor inputs, that means the real flows. I can සල්ලි යන්න නැති flows, real flows, factor inputs යන lines ටික. And in the normal lines you can see the nominal flows, that is the අපි සිංහලෙන් කියනවා මූල්‍ය ප්‍රවාහ කියලා. Right, so you can see from the if I explain you from the stretch, you can see that the households are providing factors of factors of production to the business firms, and the business firms are providing factor income to the households, that is a nominal flow. And then the business firms are providing goods and services to the households, that is a real flow. And then the households are providing like payments or giving, like paying some money to purchase those goods and services, that is the consumption expenditure to the business firms, that is a nominal flow. And then the households and the businesses are paying taxes to the government, and that is a nominal flow. And then the government is paying some salaries to the households, and the government is doing some purchases, those are the government expenditures. And the foreign sector is there, the foreign sector is doing imports and exports, right? So like the government, the firms are getting certain things from the foreign sector, so those are the imports, and the firms are sending certain things to the foreign sector, those are exports. So all those things are real flows. And there will be some like transfers from the households to the foreign sector, that means people are going abroad to work, right? And then foreign people come to our country to work, right? So those are also there, the exports and the imports, so those are also real flows, right? And apart from that, the financial market is also there, that is the financial intermediate, that is where the financial intermediary comes into picture. So that is the banks and the financial institutions. So for the like the money that the government the money that the households and the firms are the money that is earned by the households will be saved in the financial market or in the banks and the financial institutions. Those are known as savings. And then those financial markets or the financial institutions will provide certain loans to firms to expand their businesses, so those are known as investments, right? So in national income, these activities happened here and there within these individual activities. Like when we consider all these individual activities together, it is known as a circular flow of income in a four-sector economy. Right, so that is all about the introduction to macroeconomics. Right, so I hope you all are clear with that. So if you have any clarifications regarding this particular topic, you can ask, because next topic that I'm starting is related to finance. Okay. So if you're clear on these things, so we'll have a 15 minutes break, and then I will start the next part, which is business finance. Okay, so I hope you can see this. I will put the same. Okay, I have shared the PPT as well, right? So we have completed the economics part. So today we are going to start the finance part, right? So under this finance topics, so you will learn about the basic understanding of you will get the basic understanding regarding the finance topics that we are going to discuss, and there you will cover the basic terms under finance, and then you will learn how the companies and the investors are making their decisions in the financing perspective, right? So can I know whether you have any background related to finance? Can I know whether you have any background related to finance? Do you have any background related to finance or not? ඔයාලා finance related topics ඉගෙනගෙන තියෙනවද නැද්ද? There's one who has learned about finance. Okay, so however, I will since we are having the introduction to finance today, I won't think that I will be able to complete this topic today, right? However, I will just go through this topic, and I will explain these topics thinking that you don't know anything about finance. But if you have learned finance previously, so then you can recap your memory as well, right? So when we are learning about finance, what we are learning is we are learning about how the businesses are getting their money and how those businesses are paying their money, right? So that is what is learned in finance, right? So in the principles of finance, or in this particular principles that we are learning under finance, we are going to learn uh, what are the ways that the businesses are getting money or getting cash to the business, and how they manage these particular amounts that they received, and what are the ways that they are going to spend this money from the business, and how are they going to manage that. So that is all about finance. So all the topics that you are going to learn in this stage, or in the latter stages in this particular course, is going to like move around these scenarios. Simply, that is how to manage money in a business, right? So that is what we are going to learn regarding finance, right? So then I tell you some example, right? So then let's say this is a business, right? This is business ABC. A business කියමුකෝ, right? So there are ways that the money flows to the business, and there are ways that the money flows out of the business. So since you have already learned about these things, tell me, how does the organization get money from the business, get money to the business? What are the ways to receive money to the business? මොන වගේ මෝඩ්ස් වලින්ද මේ සල්ලි හම්බෙනව ඇත්තේ බිස්නස් එකකට? Tell me. What are the ways to get money to the business? Tell me. Tell me. Yes, from creditors. Yes, that is correct. That is not creditors, that is debtors, right? Debtors lagin sallien. So you're I mean you're getting money as the debt capital. You're saying that the money that we receive from loans වගේද? So normally when we are getting money, we like the initial capital can be categorized into two parts: the equity capital or the capital can be categorized into two parts: Capital can be categorized into two parts, equity and debt capital, right? So equity capital is the owner's money and the debt capital is the borrowed money. So the money that we can borrow from secondary or the external sources or the creditors' money, right? So how can we borrow money? කොහොමද මේ සල්ලි ගන්න පුළුවන් organization එකට? So they can borrow money from banks, so they can sell debentures, or else they can get money from certain creditors if they want to. Yes. Then apart from that, they can get money from sales also. මොනාගෙන්ද තව ගන්න පුළුවන්? Sales. Sales billing. So sales can be categorized into two parts again. So what are those? Cash sales and credit sales. Then other than that, what are the other things? Yes. You can get money from so a student has told me that investments වලින් සල්ලි investment එකක් කියන අපි සල්ලි යොදවන හැටි, right? So how we spend our money, so that can be for investments, right? So this is how we get money, right? So from like you can put or you can spend money as investments, right? You can spend your excess money as investments, and for those investments you can get what? Interest income. Interest income, right? Other than that, what are the other cash inflows? So how about selling assets? You have some assets and you don't need those assets, so you're selling those assets and then you're getting money. So in finance we say, in finance and in accounting we say that is asset what? Realization, right? So those are some of the ways that we can I have like put the arrow to the other side. මේ cash inflows ගැන අපි කතා කරන්නේ, right? So these are the cash inflows, right? So these are cash inflows. Sorry. Right, and capital, equity and debt capital, interest income, asset realization, and what is the other thing I told you? Sales. Sales, that is credit and cash, right? So those are the ways that we are going to get money to the business. So these are the cash inflows. Cash inflows. So then what are the cash outflows? Ways of spending money. Tell me, what are the cash outflows? How to spend money in a business. කොහොමද සල්ලි ස්පෙන්ඩ් කරන්න පුළුවන්? You can purchase goods and services, right? Goods and services, there you are making what? Creditors payments. Payments to creditors or else. Payments to creditors. Those payments to creditors can be done in both cash and credit, right? And then if you have rented the manufacturing premises, so then you are going to pay the rent expenses, paying rentals. Then what about others? So you have taken a loan, right? So then you need to pay what? Interest. Payment of interest. And if you're a company and you should pay dividends to your shareholders, so you can pay dividends, right? So that is also considered as an outflow of cash, right? Dividend payment. So then there are workers in the organization, right? So payment of salaries and other expenditure. Expenses. Then what are the other things? Then you are doing certain asset purchases, purchasing assets. Right? So other than that, can you recall the cash outflows and cash inflows in a business? So these are the overall, right? So if we talk about the broader picture, these are the ways that we can get money to the business and we can spend money out of the business, right? So as I told you, when we are discussing about finance, we are talking about the ways, we are talking about several ways that we can get money to the business and how we are going to spend money out of the business, right? And we are going to see how what are the sources that we can get money to the business and how to manage those sources, and what are the ways to spend money from the business and how can we manage those, right? So those are that is all about finance, right? So understood? So this is these are the learning outcomes. So firstly, you should be able to examine the balance sheet and the statement of changes in the financial position of of a business, and discuss the sources and uses of finance, analyze the business functions, comprehend the financial decisions, demarcate the finance function from the accounting function, discuss the function as a function and corporate strategy, associate corporate objectives and finance objectives, distinguish shareholder wealth maximization and corporate value creation. Right, so the statement of financial position and the balance sheet. So you can see that when we are talking about the statement of financial position or the balance sheet, we are going to look into the whole picture of a particular organization, right? So by evaluating or by looking at a particular organization's balance sheet, we can identify what kind of position is there, like what kind of a position that business has in terms of finance, right? So that gives the snapshot of the firm, stating how much of the assets, liabilities, and the shareholders' equity is there in that particular firm, right? By looking at this financial position or the balance sheet, you can get a clear picture about the organization, right? So that is why it is mentioned as the balance sheet is a snapshot of the firm. So it is a convenient means of organizing and summarizing what the firm owns and what a firm owes. That means what the firm owns are the assets of the particular organization, and what the firm owes are the liabilities of the organization. And the difference between those two are the firm's equity at a given point in time. And it indicates the financial condition or the state of affairs of the business at a particular moment in time. So you know, in A-levels also you have learned that when we are talking about financial position, we are talking at a particular date. Okay, so that is a snapshot of the firm. So here I have given you the basic categorizations and the definitions for the assets, the liabilities, and the owner's equity. So even though you know these things, it is better to go through this again to recap your memory and understand what are the specific definitions for all of these, right? So what do you mean by an asset? So when we define the assets, it says that a present economic resource controlled by the entity as a result of the past event. An economic resource is a right that has the potential to produce economic benefits, right? So you know that when we are defining assets, we say that it is an economic resource that generates economic economic benefits uh, in the future, right? So those are that is a definition for assets. And the assets can be classified as current and fixed assets, or else non-current and current assets. So fixed asset is that is relatively having a longer lifespan, and fixed assets can be either tangible or intangible, and the current assets has the life less than 1 year. So again, there's a explanation on the fixed assets. So fixed or long-term assets are held for periods longer than the accounting period. So if you are having certain assets that has a longer life span than 1 year, more than 1 year, it is known as a fixed asset, and they are held for use in the business and not for the purpose of the sale, right? So you know that even though uh, lorries and vehicles that are categorized as fixed assets are using for distribution purposes, are using for sales, are not categorized as fixed assets, right? So in accounting you have distinguished those things, right? So I won't explain those. So generally the fixed assets or the long-term assets are held for periods longer than one accounting period, and they are held for use in the business and not for the purpose of the sale. Tangible fixed assets, so those are building and machinery. Intangible fixed assets are patents, trademarks and all, right? So even though those are intangible, so those are held for a very longer time period. And the current assets is also there. So that is the opposite of the fixed assets. So if you are having a lifespan less than 1 year, those assets are categorized as current assets. The current assets are sometimes called as liquid assets, and those assets are expected to be converted into cash within the accounting period or the operating cycle of the business. And the current assets include cash, account receivables and inventories. And the liabilities and the owner's equity is there. So the liabilities, the definition for liabilities is a present obligation of an entity to transfer an economic resource as a result of the past event. The obligation is a duty of responsibility that the entity has no practical ability to avoid, right? So they don't have an ability to avoid. So the liabilities are resulted from a past event, and now they are having a present obligation. So the liabilities can also be classified as current and long-term liabilities, and the current liabilities have a lifespan less than 1 year, and the long-term liabilities are having a lifespan more than 1 year. And a debt is not due to an incoming year is classified as a long-term liability. That means, so if you have a longer time period to if you have a longer time period to like pay off the debt, that is classified as long-term liability. So if you have to set off the debt within 1 year, that is short-term liability or the current liability. So again you have the definition. By definition, the difference between the total value of assets and the total value of liabilities is the shareholders' equity. It is known as common equity or the owner's equity, right? So if the like when you calculate the difference between the assets, the total assets and the total liabilities, you get the owner's equity. And there's another term that you need to learn, that is the net working capital, right? So the net working capital is the difference between a firm's current assets and its current liabilities, right? So when the net working capital is it is considered the firm is considered as a healthy firm if the net working capital is positive, right? So that means you are having a large amount of current assets compared to the current liabilities. And building a balance sheet. So create a balance sheet and discuss the sources and uses of funds. So here you can see all the sources and uses that we discussed previously. So in the right hand side you can see the assets, and in the left hand side you can see the liabilities and the equity. So so this is assets, this part is assets, this part is liability plus equity. Okay, so here you have the fixed assets and the current assets, and the shareholders funds, that is equity, and the long term debt and the short term debt. So when you like add the take the summation of the assets, you get the total value of the assets, right? So that is the total value of the assets. This is the total value of the assets, and if you get the summation of the liabilities and equity, you get the total value of the firm to the investors, right? So by looking, there's another thing that you need to understand. By looking at this balance sheet, you can take 4 financing decisions, or 4 key financial management decisions. So what are those? So the first decision is the investment decision. So in the investment decisions, what we look into is the long-term investments that we are making from the funds that are available, or we can say the business expansion, new product development, and purchasing of new machinery. So those are coming under investment decisions. So those investment decisions can be seen by looking at the fixed assets. Investment decision. Right, and then that is the first decision. Right, that is the first one. And the second decision that we can take is the financing decision. Right? So I told you that when we are learning about finance, we are learning the sources and uses of funds, how to get money and how to spend money. The investment decision is a way how to spend money. The money, the how to spend the money that is available in the business. And in the financing decision, so you're going to see what are the ways to get money to the business, right? So as I told you, you can get money by using the owner's capital, and you can get money by using the debt capital. That means by taking long-term debt from loans or from debentures or from any other sources, right? So that can be seen by looking at the shareholders' funds and the long-term debt. That is the financing decision. Financing decision. That is the second decision. And then the third decision is the working capital decision. Working capital decision in the sense how to manage. So you learned what is the net working capital. So that is the difference between the current assets and the current liabilities, right? So in the working capital decision, you are going to manage the current assets and the current liabilities, right? So how an organization manages their current assets and the current liabilities can be seen by evaluating the short-term debt and the current assets. So by evaluating this, we can take an idea and we can take decisions on the working capital. That is the working capital decision. Okay, and then the next one, or the final one, so that is the dividend decision. That means, so when an organization has earned profits, there are 2 things that a particular organization can do, right? So they can Right, since as I told you previously, as like as stood like as an organization earn profits, so they can take two decisions. They can either reinvest their profits for the long term growth, or keep their profits for the long term growth, or else they can give the profits to their shareholders as dividends, right? So if they have taken if they have keep if they keep their profits in the organization as in as reserve, so that can be shown here, that is shown here, right? And then they can also decide from this, from the reserves, what they can do as the dividend decision. So how many dividends, that how much of dividends that they can pay and all. So this can be seen by looking into the dividend decision. Right. So those are the four decisions that you can take by analyzing the balance sheet, right? So those are the four key decisions that the finance managers need to take when they move forward with their organization, right? So the investment decision, financing decision, liquidity, working capital decision, or the dividend decision. So I think we can, yeah, so the other parts we don't have time to complete the other parts today, so I will do the next part in the next lecture. So and again please note that you won't have lectures in the next week, right? Next week के lectures ना, so week after next I will continue with the sessions, right? So up to now, are you all clear, or do you have any clarifications? So I hope all of you are clear, since you don't have any questions. So then we can, I think, stop for today. Thank you for participating, and have a nice day.